Greetings again, amazing traders, and welcome back. I want to take this precious time to really appreciate all of you who have been following along. I woke up to 92 subscribers already. Thank you so very much. This is everything that I could ever ask for. Thank you so much for the new subscribers, and to those of you who have been around, I say thank you. All our request is please keep watching, keep sharing, and let us grow this channel, please. I am dedicated to giving you the best of the best. If you are just joining, I will recommend that you should come to this smart money concept playlist. You are going to find a lot of interesting videos there. Now, I did a market review for this week, that is like 2 days ago. In case you have not watched that video, this first video right here, EURUSD and GBPUSD market breakdown for March 9, 2025. And I am going to jump straight into the chart, and we are going to see exactly what I said. Okay, in case you did not watch that video, please, I recommend that you should go back and watch this video, the first one, so that you may follow along as I go back to the chart. Then for the rest of the videos, please make sure that you go over the videos so that you can understand exactly what we have been doing, especially this video, the ICT power of 3. This is the mother of all the videos that I've been doing recently. Please make sure you watch this video. It's really going to help you, especially if you are just joining. Please let us grow this channel even to 100, 200, and why not make it a bigger channel. Okay, and another thing is I am going to create a Telegram group, and I will share in the link so that all of us can be in that group, and we are only going to be trading one strategy. Okay, one strategy, which is the Asian range. So you are going to take a trade, or when you spot the Asian range or the Asian session or the ICT power of 3, you are going to share in the group. If you take any trade with any of the things that I've been teaching here, please share in the group. And if I also see setups, I will share in the group so that together we can grow. And if you also want like one-on-one mentorship, I also do one-on-one mentorship. You can contact me privately and I will hold your hand. Okay, all right, thank you so very much. Let's go back to the chart and look at what has been happening this week. So let me take you straight to what we did last week. I am going to take your attention to pound dollar on a monthly time frame. Please, I'll draw your attention back again to this monthly rejection block right here. I am going to extend that across so that when we go to the chart, you are going to see exactly what I will show you. My chart is a little bit messy because I have some stocks going on. Okay, please kindly pay attention to these key levels, the lower quadrant, and then the consequent encroachment. Okay, because when I drop to the lower time frame, I will have to show you some key things there. All right, let us quickly drop to the weekly time frame for pound dollar. I don't think we have a lot going on. I remember that last week we paid attention to the this weekly breaker, this 5 down close candle. If you watch the other video, we paid attention to this inversion fair value gap here. We paid attention to this bearish order block. We equally paid attention to this volume imbalance right here. I recommend that you go back and watch so that you can follow along everything that I'm going to do here, so that I don't have to go back again to the old video. So I want to draw your attention equally to this fair value gap right here, which is on a weekly time frame. We have one fair value gap here. That could be our next draw on liquidity. We have another fair value gap to the left. Anytime you have two fair value gaps corresponding, one to the left and one to the right, it forms what we call a balanced price range. Okay, and it's a very key level in smart money concept. Anytime price goes back to a balanced price range, always expect a lot of moves from there. So our next draw on liquidity could be this balanced price range over here, and then finally this buy side liquidity that is resting above this old relative equal highs over here. Okay, so let us drop down to the 4-hour time frame, and we are going to start breaking the market from there. Okay, now on a 4-hour time frame, last week we were looking at this fair value gap right here, this fair value gap here, and I was saying that if the market aggressively trades below this fair value gap and closes below it, we could use its consequent encroachment to trade into this discount fair value gap resting below here, which is actually another 4-hour fair value gap. That was our draw on liquidity, and then we will be expecting to see price pick up from here and continue its move higher, since market structure was extremely very bullish. Okay, and I did say that if price has to go right down here, then it's going to require some form of high impact news, since this is going to act as what, a high resistance liquidity run. I think I'm going to do a video on high resistance liquidity run and low resistance liquidity run. Okay, so on a 4-hour time frame, we have interesting things going right here. We saw the market trade below the low of this 4-hour fair value gap. In case you don't know what I mean the low of this red candle right here and the high of this other candle here. The gap in between them is what we call a fair value gap. Okay, a fair value gap. There's a video that I have on the playlist. You may have to go back and check the smart money concept for beginner playlist. Okay, just like what we have here, we have the low of this candle, the high of this other candle constitute what, a 4-hour fair value gap, which is what I have marked with this color right here. So what happened is that when the market opens, it traded right down here. Okay, and I said that it was going to attack the liquidity that is resting below here, this sell side liquidity. You see, it raided that sell side liquidity with this drop right here, and then traded into the upper quadrant of what, this 4-hour fair value gap, and then we saw the market took off from there aggressively. So I am going to drop again to the 1-hour time frame, and I'm going to show you some important things on a 1-hour time frame that I was looking at in the market. So when I was looking at the market, I was hoping that the market will actually respect this consequent encroachment, this fair value gap, trade below it, use its consequent encroachment and trade aggressively into this low. Okay, so I actually paid attention when price came back here, and if you even look at the 1-hour time frame, you see that we have a 1-hour fair value gap right here. Okay, the high of the low of this candle and the high of this other candle, the gap in between them is a 1-hour fair value gap, which also corresponded with what, with the consequent encroachment of this 4-hour inversion fair value gap. Now on the 5-minute time frame, on that day I was looking to take a sell entry. Okay, when the market opens, I saw the market grab liquidity above this was the Asian range. Okay, which starts from 8 p.m. to midnight. I have marked with this color. Okay, so when I saw the market took liquidity right over here with this small wick here and then shifted structure, I took a sell right here. Okay, so on a 5-minute time frame, that was a trade that I took, and I was really anticipating that price was going to trade lower into this 4-hour fair value gap and then sweep all of this liquidity that is resting below here. But then it did not happen. So we saw the market trade below the Asian range. It took all the liquidity, the sell side liquidity resting below this Asian range with what ICT refers to this move as what, a turtle soup, where we see stops just being raided with small wicks. Okay, and then the market took up aggressively from there and then traded above this 4-hour inversion fair value gap, used the upper quadrant of that 4-hour inversion fair value gap, and then took right up. Okay, and the market traded right up, attacking all the buy side liquidity that was resting above those relative equal highs. What I mean is, when the market left that area, what do we have right here? We have buy side liquidity resting above here. Okay, which is also the lower quadrant of what, of that monthly rejection block that I just showed you. Okay, the monthly rejection block, this is the lower quadrant. So we saw price trade right above here, attacking all of this buy side liquidity here, raiding all of it. That's why I have here buy side liquidity rate. It took all of that and then traded lower again. Okay, why did the market trade lower, and why did it even end here? On a 1-hour time frame, if you look at your chart, you are going to realize that we have a 1-hour fair value gap here. Okay, the low of this candle and the high of this candle constitute what, a 1-hour fair value gap, and you saw how price returned into that 1-hour fair value gap right here and then stayed there. Okay, you see how price stayed there. Okay, and then yesterday's trading, which was actually the 12th of March 2025. If you have been following along, we have been talking about what, the Asian range. Okay, now when the Asian session opens, which starts at 8 p.m. to midnight, we saw a form of consolidation on the market, which is what we have been preaching. And then we say if we are bullish, we want to see a run on what sell side liquidity, Asian low sell side liquidity, which is exactly what happened. This is the midnight opening price, which is the IPDA true day open, right? A midnight opening price. We have been saying that if we are bullish, we want to see price trade below the midnight opening price or the Asian session or the Asian range. Take all the liquidity below the Asian session, okay, or the Asian range, and then if we wait for a market structure shift on a lower time frame, we can take our buy entry, okay. And that is exactly what happened here. Accumulation occurred here, and then we saw a run on those Asian lows right here, okay, with this small move right here, which is also called what, a ICT turtle soup. A market structure shift occurred right here, and then price came back where, into this 1 hour bullish order block. There's a 1 hour bullish order block here, which is this candle that I've marked right here, okay. A 1 hour bullish order block. You saw price came back to the high of that 1 hour bullish order block, and this 15 minutes breaker block, in case you don't know about breaker block, because we have a low, a lower low, a high, and this last candle right here constitute what, a breaker block. You saw how price stayed at that breaker block, attacking the buy side liquidity that is resting right above here, okay. Not only attacking that buy side liquidity, but equally hitting the consequent encroachment of that monthly rejection block that I just showed you. This is the consequent encroachment that I marked right here. You see how price hits that consequent encroachment and stays right there. Look at the bodies of this candle, and then we are seeing the market currently retracing back into this range. Now notice how many times the market came back into this level here. So you could take a first entry here, second entry or third entry, and you will still be right, okay. And then you will target all the buy side liquidity that is resting above here, okay, and that would have been a very good trade for yesterday, okay. So this is accumulation for today, for yesterday, manipulation right here, we have distribution, and then finally we have a close back into the range, which constitute what, an ICT power of 3. Now if the market is retracing, where could it possibly be retracing? Now we have a fair value gap here, okay. We have another fair value gap here, which is actually 15 minutes. So we could come back into this 15-minute fair value gap and then continue to move higher, or we could still stay right here since we are extremely bullish, and then we continue to move higher. So our general view for the market is we are bullish. We are bullish for pound dollar, and we are also bullish for the euro, okay. So even if you go back to the 1 hour time frame, you mark the low of this candle and the high of this other candle, we are still going to have what, a 1 hour fair value gap. And if you bear with me, you will equally agree that price is still trading into its consequent encroachment right here, okay. So we are currently at the consequent encroachment of that 1 hour fair value gap. Worst case scenario, if price has to go down, it will come to its lower quadrant, or even come right down here to this bullish order block, okay. This bullish order block is called a bullish proportion block, okay. A proportion block is a order block that has traded into another order block. This is a 1 hour bullish order block. This is another 1 hour bullish order block that is inside of this other bullish order block. So it becomes a proportion block. A proportion block means a candle that is supposed to propel price higher, and that's why you see when price, the market returns to that block, we see this aggressive move higher. Why? Because it acts as a proportion order block, and then we hit the consequent encroachment of that monthly rejection block. And I say that rejection blocks also act as what, fair value gaps, okay. The algorithm, which is the price delivery engine, also called IPDA, the interbank price delivery algorithm, recognizes wicks as gaps, okay. Anytime we see a wick, just know that the algorithm uses those wicks as what, as gaps, and the midpoint of every wick is also the same as the midpoint of any gap, okay. I hope you get it. So we are going to go to euro, and we will see exactly what happened also on euro against what we outlined last 2 days ago or 3 days ago regarding what was going to happen in the market. So let's quickly go back again to the monthly time frame, and we are going to start breaking euro down as well. So euro dollar, okay, on a monthly time frame, we paid attention to what, I drew your attention to what, this premium monthly fair value gap, okay, and then I drew your attention equally to the buy side liquidity that is resting right over here, all of these highs. This is where we could likely see the market draw to, okay. I hope you remember. And I'm going to go straight down to the daily time frame for the sake of time. And on the daily, I equally say that there was a level that we were paying attention to, which was a daily fair value gap. If you watch the other video, the daily fair value gap was the low of this candle and the high of this candle, and we extended that across. This is what we have here. We're also looking at what this daily bearish order block, okay, and we're saying that price could react to it, drop a little bit lower, and then continue to move higher into this monthly fair value gap. That was our draw on liquidity for this week. Now we are going to go to the 4-hour time frame so that we save time. On a 4-hour time frame also, we had a 4-hour fair value gap, and I was equally saying that if the market can trade below this 4-hour fair value gap, it is going to use it as an inversion fair value gap, and we may likely see price drop lower into possibly this other 4-hour fair value gap right here, like so. That is what I was saying last week. I said that we could attack all the sell side liquidity that is resting below these lows here, all of these lows, the sell side liquidity resting below here. I said we could attack that and trade into this 4-hour fair value gap before we see the market continue to move higher. Now when the market opens, we saw how it traded into the daily fair value gap that we talked about, and you see how price respected the high, the low, the midpoint, and the upper quadrant of that daily fair value gap, okay. If you run our Fibonacci tool, okay, you are going to see how many times the market came down into the lower quadrant of that daily fair value gap, into the upper quadrant of that fair value gap, went into the high of that daily fair value gap, okay, and then came back, respected the lower quadrant, even though we traded right below. But see how the bodies of the candle stays at the low of that daily fair value gap, and then we dipped into what, this 4-hour fair value gap right here, and then the midpoint also of this 4-hour bullish order block, these two down close consecutive candles, okay, and then we took right up, attacking all the buy side liquidity that was resting above these old highs right here, okay. We swept all of that liquidity and then traded into the low of what, of this monthly fair value gap that I outlined last week, saying the market was going to draw into, okay. That was the low of that monthly fair value gap, okay, which was our draw on liquidity coming this week, as I said in the old video. So now what are we currently looking at? If we drop down to the 1-hour time frame, you will bear with me that we are currently trading into what, a 1-hour bullish fair value gap right here, which is actually a BC, a buy side imbalance, and a sell side inefficiency. So we are going to study how far price is going to stay here, and if we close below this 1-hour fair value gap, it's going to act as an inversion fair value gap, okay. But if we stay right there, then there's a high possibility that we are going to see price continue to move higher. And where is it likely going to draw to? Remember, our overall draw on liquidity remains this buy side liquidity over here, okay, liquidity. But we are going to see how far price is going to trade and treat this monthly fair value gap, okay. So until now we are still bullish on the euro dollar and pound dollar, and we are going to see what is going to happen. So pay attention to that 1-hour fair value gap from tomorrow, from today, tomorrow, and then we are going to study how the market is going to treat this 1-hour fair value gap. We still equally have a 1-hour bullish order block here, so we could still trade back into this 1-hour bullish order block, which is also the midpoint of this daily fair value gap, okay. That can still happen, and then we'll be looking for buy entries right down here. When we look for buy entries, our first draw on liquidity is going to be this high that is created over here. This is going to be our first draw on liquidity if you are buying, and then we are going to see how far the market is going to treat this monthly fair value gap right here. So we are going to calibrate the monthly fair value gap like so. We are going to take the low, the midpoint, the consequent encroachment and the upper quadrant, okay, and we are going to see how the market will treat all of those levels. So thank you so much for watching, and we are going to stick around. If there's any update I am going to share here, I still plead with you that you should like the video, you should share, and then you should comment also. If there's any other thing that you want me to do, or any video in particular, you may still put in the comment section, and I am going to do a video on that. So hopefully we are going to meet in the Telegram group so that we can share ideas there, and then we are going to grow together. All right, thank you so very much, and stay safe. Goodbye.